Good morning, ladies and gentlemen. It is December 5th, 2023, 8:46 a.m., and I have not slept all night. Yes, that is correct. I have not slept the entire night. I got 1 hour of sleep this night, and honestly, I'm not going to lie, I'm really enjoying it. And the reason I'm enjoying it is because I think there is a productivity hack that might be unlocked in my life, on a personal level if I stay up all night and work and maybe I sleep during the day. I don't know if I'm sold on this yet. Probably got to do it for another day or two to see if it's really, it's something that I could relate to. But it was a good night. I stayed up. I got a lot of work done. Got just a lot of stuff done. There were no distractions versus during the day. There's so many distractions. And it kind of got me thinking like, maybe if just, you sleep at night or you sleep during the day, you have a better understanding of like just getting stuff done. So we're going to try today. I'm going to sleep at like 12. I'm going to sleep from like 12 to 4 today and see what it feels like. But I feel great. I feel phenomenal. On top of that, last night I stayed up, and while I was doing my work, I had a friend text me a question at 12 a.m. The question was, hey, are you bullish on Hood? And at 2 a.m., I gave him a call, and this call ended up, if you're following me on Twitter, you would know about this. This call with my good friend Sebastian, who's just a phenomenally smart investment banker down in Los Angeles. This call ended up going for 2 hours, and we came to the conclusion that Robinhood, that touched $10 yesterday after hours because they had some interesting stats released on their 8K, it's a bit undervalued. And so that 2 hour discussion while I was doing my work, it led to some revelations. And so we'll talk more about what we understand about Robinhood. Thank you all for being here. You might have noticed this outfit. Well, why am I wearing this? I don't know. I haven't got any sleep. I was like, you know what? Fuck it. Let's wear this outfit. Probably not going to keep it on for the rest of the day, but I found this in my mom's closet and I'm like, oh, this is really like warm and comfortable. Let me take this off right now because this is looking ridiculous. But yeah, I was like, you know what? Let's start the market code open like this. And then this hat I found in my dad's closet. So it's like a mix of my mom and my dad. Folks, it's time to open the market because we got a lot to talk about. West Coast Brando, Trucker Rob, Isho Sad, Miss Yiger, Marcus, Sethy Roth, Scott. Let's make some money. Let's make some money. Rikus T, Carl, good afternoon. Franz, Bayray, Jocelyn, Tabor, Scott, John, Kelly, what is happening? That's why I didn't even look at the chat during the intro. I was just like, let everybody say. I knew you guys are going to have some stuff to say. Johnny Max's admit looks like he's ready to whip out a trumpet instead of a cowbell today. Oh boy. Hello. Thank you for being here. It's a muffler. Bayray says Amit thinks he's the main character. Dude, it's my market open. Come on. We got to be the main character on my market open. Jonah Anderson, Carter. Thank you all for being here today. Jayberg, Vashon, Mark. All right. So I don't know if I'm actually going to stay up in the night versus sleep during the day. I mean, yesterday, I think it was more productive than usual, but we'll see what ends up happening. Yesterday, I had to stay up late at night just because I just had to. I had too much work to finish. I was like, you know what? I got to stay up. And it was easier to get work done. I just didn't it was just like almost 5 hours of productivity getting stuff done versus during the day. So we'll see what happens. But overall, last night was pretty good. And I got to do some DD while I was up last night. So let's start off with this. We've got a bunch of topics I want to talk about. Palantir dropping 9% yesterday. Want to discuss why it had that drop and what we can expect later going on today. Robinhood, obviously, a company I've been pretty bullish on. Robinhood touched $10 in the after hours yesterday. Right now in the pre-markets, Robinhood's about $9.80. So it'll be interesting to see what it opens at. And Bitcoin continuing to maintain its momentum. Right now, 41,879. Bitcoin touching 42,415. That has obviously been really beneficial for a lot of the crypto companies. It has obviously helped Robinhood, and that's why we're seeing some momentum there. I think let's start off with Palantir. Let's get that out of the way. Let's do a discussion on why it went down 9% and what I'm expecting today. I actually had some time to condense the information from last night to get a better understanding of what's going on. And then after that, we're going to do Robinhood and crypto because, dude, for 2 hours last night, me and Sebastian, we actually came up with a valuation. And because he's a big numbers guy, and so he wanted to understand the story. I gave him the story. And then he was like, all right, we got to put a valuation on this bitch. And I was like, all right, let's put a valuation on this bitch. And then for another hour, we just found whatever numbers we could. And we were like, okay, this is the valuation. And it was such conservative estimates for what needs to happen in 2024. And we got to some interesting price targets. So I want to talk about that. And then we'll keep going from there. Erwin says bought 1,000 shares of Hood, average price $8.29. Yeah, I think a lot of people that got in that $8 range that we've been talking about over the past couple of weeks they have, been able to make some money on it, because at this point, Robinhood is the cat's starting to get out of the bag when it comes to Robinhood. That's all I'll say. And I did a lot of DD last night. If you just go to some certain parts of the internet, see what people are saying about Robinhood. There were people talking about it at $8 and as the best risk to reward in the market. And I think even at $10, it could still be that best risk to reward. So the question is now just seeing if the story can ultimately play out. All right, let's talk about Palantir. What happened yesterday? So Palantir dropped 10% yesterday. It was a pretty nasty decline yesterday. And there were a couple of reasons for why it happened. Right now, Palantir, the pre-market's down again. Yesterday, it was at 1840. We got to the point where Palantir was at 1807. It was very close to touching that $17 level. If you had to ask me, where does Palantir go? I think we're going under 18 today. I honestly do. I don't think there is enough support to keep it up. Because my question, and remember, this is the question I posed a couple of weeks ago, which is who's buying the dip, right? Like, who's actually buying the stock? Yeah, are there dip buyers? Yes. But my broader question was, given all the catalysts that have happened so far for Palantir, who's actually stepping up to the plate and buying versus selling? And my thesis is kind of like, I just think there's going to be more sellers than buyers at this price. So what happened yesterday to cause some of that decline? Right now, officially down 10% from yesterday, 1827 in the pre-market. Number one, I think is institutional investors decided, let's take some profits. Stock's up 200% year to date. We need to take some profits. I think one of the reasons that they woke up yesterday and started taking profits is because it was the first day of trading in December. And a lot of these institutional investors were like, you know what? We've got to take some profits. The stock's up. We might have a $10 average, $15 average. Our clients deserve to have some distribution of that capital. We deserve to lock in some gains. And because in the beginning of December, you have rebalancing, you have tax loss harvesting, you have so much shakiness, and the market was up 9% last month. Again, remember, that's not natural. The S&P you're lucky if you get 9% a year. We got 9% in a month. And when that happens, there tends to be a little bit of a pullback and cooling down. And we're seeing this with big tech, with a lot of, big tech stocks just being like, all right, we're going to cool down. Apple, Amazon, Microsoft, and Microsoft, fell down pretty dramatically yesterday, 3%, saying, okay, we had our run. It's going to come down. If big tech falls, then a lot of the other indices tend to fall because big tech makes up so much of the indices. So I think, a lot of investors were like, if we got Palantir right this year in a world in which a lot of people didn't get right, let's take some profit. So that's one of the reasons. 9% in a day did not feel like retail. I will definitively say it was not retail. This was larger institutional investors that decided that they wanted to take some profits. And I think that's what we saw on Robinhood. As Crossroads posts out in the chat, this is going to be the second reason. For those that did not get to see the William Blair report by analyst Louis De Palma, this analyst does not like Palantir. He's had an $11 price target for a long time. Honestly, he's had a pretty stupid price target, and he's looked pretty stupid all year. Sorry, Louis, if you're watching. You got Palantir wrong this year. I don't know what to tell you. Now, maybe if Palantir goes back to 11 in the next couple of weeks, you'll be vindicated. But this is an analyst that has had a clear bias around Palantir for a long time. If you read any of his research, he came out with a report yesterday. Unfortunately, these analysts have a little bit more mainstream distribution than, other people that I would tend to think are smarter than some of the analysts. And he came out and said, look, the government business for Palantir is getting more competitive. The government wants to get open source technology from different vendors versus closed source technology for certain contracts. Therefore, Palantir's government moat is going to be declining. I thought this was the dumbest argument I've heard in a very long time. He could be correct that the government's getting more competitive with how they procure contracts. Sure, that could happen. But there's just so many pieces of information that kind of hedge back against that. Number one, Palantir just got $250 million last month, end of September, for AI and ML research from the Army, right? So even if their Army Vantage contract, which is the one he was talking about, is not going to be renewed to the $458 million contract they got back in 2019, that's ending in a couple of days. If that's not renewed to the same level, yes, you have a point that maybe that contract's more competitive, but to drop the stock, because that means all the contracts that Palantir is gunning for, in regards to JADC2 over the next decade that are going to be allocating billions of dollars of defense spending, are just going to go to crap because this one contract is not as likely for Palantir to get, where there's no even proof that that's the case, right? That's just your research from some presentation you watched, is absolutely ludicrous. That doesn't make any sense to me at the end of the day. And on top of that, you really got to ask yourself the question, like, is that enough of a reason to say that the government is now going to choose open source technology, which for some reason just feels like it's not going to be as safe as closed source technology? Okay. So it's like Palantir at the end of the day is a accredited, confidential, secure platform that the government trusts for a reason. I don't know if the government wants to download their security software from GitHub, right? Like, I think there's a broader thing that the government cares about when it comes to technology and applications of technology for defense. So from that perspective, it just didn't seem like it was a reason for Palantir to be like dropping that dramatically. I thought, Palantir was falling just because institutions were taking profits because the valuation got overstretched, which I think is totally reasonable to me. And that makes way more sense than Louis De Palma's analyst note. Nonetheless, all of that compounding together with the fact that it was the first trading day of December, that is what sent Palantir lower. I do think we fall under 18. Could I be wrong? Sure. But I don't think there's that much support at 18. I mean, like, I personally just don't think that's the case. And if I'm wrong, then I'm wrong. And I want to capitulate 18, 19. If we end the year at 18 or 19, I think that's a great year for Palantir shareholders. But we could be headed lower. And if that's the case, 16 and below is my price target to start buying more. And if we see that happen, then we're going to get some money to come out of our pockets and buy some Palantir. At least for me, those 16 and below is what I look for as well. 15 is incredibly reasonable. I agree. If I see 15, I get very excited. I have cash secured puts that are expiring at a 14.5 strike in December 15th. So, I mean, dude, if those get assigned to me, I'll be very happy. like give me those shares. That the average on those would be like 13.62 given the premium I got. So I would be fine with that. But let's see if it actually happens, or we, stop at 15, 16, 17 versus 18. I think a lot of people, did want to buy the dip heavily yesterday, and I was not buying the dip heavily. I mean, I've been very honest. Like, dude, 18, 19 for the growth Palantir is putting up. It's a lot. There's a story you can be paying for, and that's a great thing to do. But then there's growth that the street has to ultimately put those estimates against. And we saw insiders sell at 21 for a reason. Like, the stock had run up a lot. Another insider sold 500,000 shares 2 days ago, Stephen Cohen. So, like, at that point, I would be really happy getting it at 15, 16, because I'm like, yeah, I will. I love the story, and I would love to load up more at a little bit more of a reasonable valuation than 18, 19, 20. So that's kind of how I'm thinking of it. But again, if you're really, really long, as I am, but you don't care that much about valuation, then everything under 20 probably is not the worst buy going into a decade from now. So we will see what ends up happening with Palantir. Crossroads is probably right. Give it 2 weeks, and we can probably be knocking at $20 again. I think we are seeing a little bit of a decline over the next 2 weeks, which is, I think, reasonable in terms of the stock market just cooling. And then going into Christmas, we get a much more broader rally given the momentum that we have going into this rally. And one of those stocks that I think is going to be benefiting from that momentum, let's talk about it now. Palantir. I'm so used to saying Palantir. Robinhood. I meant to say Robinhood. Robinhood. So again, for those that are just joining, I stayed up all night doing work and on the side having discussions with some people that I trust talking about this damn stock. And goodness gracious, I don't know what to say other than the fact that I think it's undervalued. I think Robinhood is undervalued. So I put up a thesis last night on Twitter. Every hour I just added a little bit more to it, and I wrote a lot of stuff talking about Robinhood. Ultimately, at the end of the day, what I am seeing with Robinhood as of last night, which is the new information that we got as per their 8K, is that let me actually pull up Crossroads' tweet so you guys can see the exact one. They have increased their notional crypto trading volumes in the month of November. This was released on their 8K last night. This was not as a press release, so we had to go dig and find it. And this is what we saw. Customers contributed roughly $1.4 billion of net deposits to Robinhood in November 2023, and crypto trading volumes were up 75% above October 2023 levels. This is why Robinhood is pumping right now. 75%, and this will tie into the crypto discussion a little bit, above October 2023 levels. October 2023, we saw 92% levels year over year of an increase in crypto trading volumes. So that was in October, and that amounted to about $2.3 billion worth of trading volumes on Robinhood's platform for crypto in October. 75% of that, you're closing in on $4 billion of trading volumes on Robinhood in 1 month, which was last month. And on top of that, you had $1.4 billion onto the platform got deposited, which is higher than the $1 billion that was deposited in the month of October. And so Crossroads, great account on Twitter, by the way. If you don't follow him, great fintech analyst, very bullish on PayPal. Here are the catalysts going into the next 6 months. Crypto rollout to the entire EU plus a crypto bull cycle. GAAP profitability recaptured in Q4. They will be GAAP profitable in Q4. It's going to happen. High cash swaps, higher interest in equities, international expansion of trading platform, product expansion. there's a lot to look forward to when it comes to Robinhood. On top of that, if Bitcoin keeps doing what Bitcoin needs to be able to do, I think Robinhood is going to benefit from it. Like, it's becoming more and more obvious right now. Robinhood 986 in the pre-market. We were talking about Robinhood at 793. At 793, it made no sense. Now at 780, at 986, it makes a little bit more sense, but it still makes no sense. The call I had yesterday with Sebastian, who's a good friend of mine, was trying to come up with a valuation because he's a numbers guy. And we came up with a valuation that took the average revenue per user plus the monthly active users and the enterprise value minus the debt, and we came up with a market cap. And so in a nutshell, it was a little complicated, but in a nutshell, this is kind of what we did. Okay. By the way, yes, Kelly in the chat, thank you for linking Crossroads on Twitter. I would highly recommend everyone, if you're not on Twitter, follow Crossroads on Twitter. Really, really good Twitter account, and just like awesome fintech analyst. So please make sure to follow him. So we actually did something really smart. Okay. We actually did something really smart. Because Sebastian was like, I'm trying to understand the story, because he's been looking at it for a while, and he's like, I see that you're bullish. I want to be bullish as well. So then we talked for an hour about the story. He was like, all right, fuck it. I'm sold on the story. This makes sense. Then he looked at the numbers. And once he saw the numbers, that's when he was like, oh my goodness, this is something we really have to pay attention to. Robinhood is trading at a 1 to 1.3 EV multiple. Okay, so the street's giving about 1.3 above their enterprise value of 1 to try to be able to come up with an understanding of what the company is worth. So the street's basically giving them no premium. 70% of their market cap is basically being treated they're getting a multiple above 70% of their market cap in regards to their EV. Now, what does that mean in the context of trying to come up with an actual valuation to be able to look in the future? If you look at Q2 of 2021, which was their best quarter, they had 21.5 million monthly active users, and they had an ARPU of $112. Okay. So you take those baseline assumptions. That was their best quarter. That's when they knocked it out of the park. That's when they brought in $233 million of crypto trading revenue, which was insane in one quarter to be able to do. How can we model out something going into 2024? So we said, okay, up until 2025, let's take their current MAUs, or their current net cumulative funded accounts, at 23.3 million, which is above 21.5, which is really impressive in the past 2 years. It's hard to get people to sign up on a brokerage account. So the fact that they've been able to get people onto the platform, even though those MAUs declined to 10.6 million or 10.3 million, the MAUs declining is irrelevant. The fact that they got those people on the platform is the most important thing, because when trading kicks up, those people are going to start trading again. Let's say they're going to have 23 million people, or sorry, 25 million, which is very reasonable when it comes to trading in the next year and a half as equities start getting higher, right? And we start getting more people trading, because they had 21.5 million back in 2021. And let's say the average revenue per user goes from 80 right now to 100. Right now it's at 53 to 80. And they did that in like 5-6 quarters, which is pretty insane for them to be able to do, to go from 53 as your ARPU to 80. Let's say they go from 80 to 100, still below that 112 level at the first time you saw. You take that, you take the debt that they have, you divide that by their fully diluted outstanding shares, and you get to a valuation of about $16, which is very conservative given the assumptions that we put in already in the first place. Then, and here's the kicker. This is the part that I didn't mention. We are going to keep their EBITDA multiple at 15. So the street right now is giving Robinhood a EBITDA multiple of 15, which is insane. 15 times EBITDA. That doesn't happen. I mean, in the private market, most companies are commanding at least a 20 times EBITDA multiple. If you don't give Robinhood an EBITDA multiple at 15, and you factor in increased MAU, increased average revenue per user, which obviously should happen if more people are trading, more in transaction revenues are going up. That's kind of a given, especially more crypto revenues going up. Robinhood without a multiple is at a $16 price target. You give it a multiple, it gets to an $18 price target. So we were trying to make sense of, like, if you take in very basic assumptions around user growth, average revenue per user, you subtract their debt, you take their current market cap, and then you add in the EBITDA multiple without giving it a multiple, what do you get at? You get at a market cap that at this point simply does not make any sense. Market cap right now, Robinhood being 8.26 billion, and the enterprise value being just slightly above that, it doesn't start to make any sense. Inbound says all of fintech is undervalued. I think that speaks to something about the sentiment on fintech. And that's the big point as well, which is that there is this broader theme of fintech that is starting to pick up. Does it last? I don't know. What I do know is that Robinhood is participating in that fintech rally. And here's the kicker. There are $3 billion worth of Bitcoin exposure on this platform. And so when you look at it from that perspective, then the question becomes, okay, so there's 115,000 Bitcoin that are on this platform that Robinhood is a custodian of. They have $90 billion of assets under custody. 5 billion of those assets under custody are crypto. So as that crypto notional trading volume goes up, which just absolutely went through the roof, that's why we're seeing Robinhood up 2% right now, because those November trading volumes, the cat's out of the bag. The street's like, holy crap, if this keeps up, which in December, it's not slowing down unless Bitcoin crashes back to 30K, which is likely not going to happen given the research that I'm doing. It seems like Bitcoin is sustaining itself. Robinhood's Q4 earnings, they're going to be GAAP profitable, and they're going to say that their transaction revenues are through the roof on crypto at least. And on top of that, they're still bringing in 5.5 on the $5 billion of cash that they have. So their cash to market cap ratio as well makes no sense. Their EV to enterprise, their enterprise value to debt makes no sense. And then you start looking at what are the catalysts. The catalysts are crypto goes up. Robinhood is a very easy proxy play because all that trading volume is going to happen on Robinhood. And on top of that, they're moving to the UK. I mean, they're moving to the UK. They are there right now. They are expanding. Those MAUs are going to go up. UK people are desperate to have a brokerage that actually works for them. They're offering 5% in the UK. They're going to have more cash on their balance sheets. It just doesn't seem like this company deserves to be at this valuation. And I've gotten more bullish and I'm just buying more Robinhood. So like that's what I came to the conclusion to last night. I was like, this is stupid. This really doesn't make any sense. The way I'm wrong about this is if crypto, shits the fan and 41,000 on Bitcoin doesn't sustain itself and we go back down to like 30,000, then like, yeah, maybe we have an issue. But and this is why I've been trying to learn about crypto more over the past couple of days. I'm like, all right, so what is this? Sure, I can buy some Bitcoin, but that's not going to give me the alpha that something could give me as a proxy to Bitcoin, given it still is undervalued. Like to me, I'm looking for what is the best risk return in the market right now. I do not see a better opportunity other than Robinhood. It's just like, and basically what Coinbase did going to 5x based on all the crypto trading that happened. I don't think Robinhood can 5x, but I think Robinhood can do something similar to that once that crypto volume starts getting higher and higher. And the street's just starting to see, as per their 8K last night, that volume starting to go higher and higher. Shits the fan. Yes, I'm sorry. That was a brain fart. I just needed something to say, and shits the fan came out. So if crypto crashes, then yes, maybe the thesis is broken here. But I think in the next 5 months, if you're even just doing this as a trade, and crypto continues to do well, Robinhood can easily spike up to that $18, $20 range if Bitcoin starts doing well. And even if it doesn't, there's still a lot of money to be made there. So what's your bear case for Robinhood? Yeah, I think the bear case is that crypto doesn't do as well. So the equity, the notional trading volumes on crypto start to decline. But I think this month they're going to do good, right? And then second of all, here's the biggest bear case, okay? Here's the biggest bear case on Robinhood, and this is the bear case on a lot of other stocks as well. Man's had 1 hour of sleep. Now he's saying shit's the fan. If we get into a recession and the Fed has to lower interest rates and stocks don't go up, that's where Robinhood is fucked. Because basically think of it like this. Let's say we get into a recession and the Fed lowers interest rates. Robinhood's a pile of cash that's generating interest revenue, that goes down because the Fed lowers rates, and the Fed would be lowering rates to try to stimulate the economy. And then if equities don't benefit from interest rates going down because the recession is that bad, meaning like the Enphase and Teslas and Palantirs that should go up because rates come down, so the cost of capital becomes cheaper, so growth stocks tend to do up. If that doesn't happen because the actual economy is like fucked, and like the Fed's like, no, we're trying to cut rates aggressively so the economy can move better, then equity trading volumes are going to go down. Crypto trading volumes are going to go down if crypto gets fucked as well. Options trading volumes are going to go down, which means the core business of Robinhood, which is incredibly cyclical, which is why I don't really think it's an investment. I think it's a trade at the end of the day. That goes down on top of their interest revenue going down. Then Robinhood's fucked. The problem is if that happens, I don't think that happens in the next 6 to 8 months. I think that takes time to happen. And I'll be out in the next 6 to 8 months and I'll take my money, right? And so I think there's this window of opportunity in the next 6 to 8 months where we're in a Goldilocks zone where crypto's going to go up. Robinhood's going to be GAAP profitable. The street's going to be like, why are we giving this an $8 billion market cap when they have $6 billion in cash? They're a platform that's being used. They're getting all this expansion in the UK. People are starting to get back on the platform. Could we rise back up to $12 to $15? I think that could happen. And I think we could make some money in the meantime. So if that's the case, then I think that is where we can do well. Jesse says, how does the value compare to other brokerages? IBKR is worth $33 billion. And E-Trade, I think got bought out for like 13 to 15 billion. Robinhood's at 8 billion. So even if you're looking at it in comparison to its peers, Schwab is worth like 114 billion, right? Obviously, Schwab offers a lot of other services, but $8 billion just seems like it's too cheap to pay for this type of innovation that you're getting on Robinhood. And that goes to the broader thesis of like, dude, like the product is actually good. This is the other thing I was talking about Sebastian last night. I was like, dude, like, do you think there's a moat? And he was like, do you think there's a moat? And I was like, everyone has killed me. Remember when I was on SoFi Weekly and I was like, Robinhood does have a moat? And they were like, what's the moat? And I was like, dude, you're going to hate me for saying this, but the UI is a moat. Like it's a moat. Like it's the reason people love using Spotify over Apple Music. Like there is a moat to that user experience that is kind of unexplainable, but it just works and it makes sense and it gets people back onto the platform and they just stay stuck on it. And Sebastian was like, dude, I'm not allowed to use Robinhood because of where I work, but I use Robinhood every day to check stock prices because the UI is just that phenomenal. So yeah, I think there is a moat. If you believe there is a moat and it's undervalued, I think this baby's running. I don't see what gets us back down to 8. Could it happen? Yes. Maybe if like the economy and the stock market crashes a little bit, but I just don't I'm looking at the sky right now. I'm literally looking for the light. Like I spent a long time last night just like thinking about this. I think it's fucking undervalued. And I think we're going to make some fucking money on Robinhood, bro. Like I think this is what's going on. And so if you're in it with me, you're in it with me, and we'll see over the next 6 months what happens. But I think it's going to work. A UI is not proprietary. That is correct. A UI is not proprietary. But then you listen to Vlad. He did a bunch of interviews over the past couple of days. Talk about here's one point that he said. He said when Bitcoin was running to 40K last night, all of the screenshots on Twitter were literally from Robinhood. They weren't from Coinbase. They weren't from Webull. People go to Robinhood. And these are these anecdotal things you're seeing. I'm like, yeah, dude, I tweet screenshots from Robinhood all day. It's part of the appeal of the platform, which is why there's $3 billion worth of Bitcoin on the platform itself. So I'm buying. I'm bullish. I'm still bullish at these prices. And, not financial advice, but if you guys want to know what I'm excited about, it's Robinhood. Honestly, it's Robinhood. And we'll see what happens. We'll see what happens at the end of the day. All right, so that was Robinhood. We got to discuss that. Thank you 603 people for being here. We discussed Palantir down 9% on the day. Yesterday, now down 10% in the pre-market. Robinhood we just discussed for the past 10 minutes. Right now in the pre-market, Bitcoin 41,866, Coinbase down 1%, 139. Spotify was ruthless yesterday. We didn't get to talk about it, or I think we talked about it at the end. They cut 17% of their employees. The stock went up to $200. Stock went up like 8%. Yeah, absolutely insane. So the market was really happy about that. Tesla falling to 233 right now. Tesla's missing some catalyst. Cybertruck was not the answer to the catalyst. Right now, the stock is not being respected by the street at all. Nvidia at 453, Microsoft at 367, big tech continuing to go down. Amazon 143, Google touching below 130, Disney 92. Truist down a little bit in the pre-markets, 33.10. And S&P, the actual index fund, 454, down 0.4% after being down 0.52% yesterday. I think it's cooling down a little bit more as well. So we are seeing a little bit of red in the pre-market, and that goes to some questions of the macro. Let's discuss macro. I need a soundboard where I could press a button and it's like macro with a mitt, like some random lady starts. We need a jingle. We need little jingles here as we move on to different segments here. Okay, so let's do some macro stuff. 10-year. Where's the 10-year right now? 10-year treasury actually was down this morning. And that 10-year treasury, also we're getting JOLTS report today, which is the job openings. I think we're going to see job openings start to go down and unemployment start to go up, which is not good long-term, but obviously it'll be good for inflation. But it is something to keep your eye on because if that number keeps going higher, then that's not going to be the best. 10-year down to 4.209. We are literally we are on the precipice. I got the word. I used it correctly. Of 4.1. We see 4.1. This is going to get exciting. And, maybe the equity markets aren't going to react yet because obviously the stocks have been up 9% over the past month. So equities are chilling a little bit. But we see 4.1, dare I say 3.9 on the 10-year. Things are going to get exciting, even if it means things are breaking in the broader economy. It's going to get exciting. We have CPI coming out soon. That CPI data having a 2 handle. Right now it's at 3.2. Obviously, oil is going to be down. It was a great month for oil in terms of depressed prices. And shelter, those lagging indicators are going to start to become indicators in the month of December. That's going to affect CPI. it's going to get to the point where I don't know how Jay Powell's going to get people to not be excited about the market. The only thing he's going to be able to say is, look, guys, we haven't hit 2% on inflation, so you got to chill out. And I think the market's going to be like, we're calling your bluff. We don't think you actually care about 2% on inflation. And even if you do care about 2% on inflation, we think we're going to get there quicker than normal, which is why you're going to cut rates. And equities are just not going to be flat when that happens. They're going to have some momentum there. And I think we're going to see that going into the back half of the year. So it's going to be exciting to kind of see what happens from there. That 10-year is coming down. Oil prices are also slightly up just a little bit today, but it is down. I want to play a clip that I saw this morning that I thought was actually really good, discussing what's going on in the macro in regards to rate cuts. Again, these rate cuts coming down is beneficial for a lot of different scenarios that we're seeing, and I think that's going to be impacting different parts of the market. So let's play just a little bit of this clip, and then we'll keep going from there when it comes to rate cuts. Why are you guys talking about my shabby bricks in the market? Amit got his soundboard the same place he got those bricks. Oh my gosh. Okay, let's take a little bit of this, then we'll get back to it.
From Rick Reeder from BlackRock right there. Agree or disagree with him that the market's been a bit presumptuous, assuming that we're going to see these cuts, and maybe that some of this rally's been fueled by just a false assumption?
Yeah, I think I agree largely, with what he's saying. I think that the market is assuming that this favorable inflation data that we've gotten recently that's propelled the market higher is going to, continue to trickle down in a straight line. And I would always caution that these trends, after the fact look like a straight line down or up, and I think it'll be bumpy, but I think the trend is in place, and I think...
So now the Fed is saying 61% chance we're getting rate cuts in March. I mean, that's not a joke. These things tend to be more right than they are wrong when it comes to predicting the Fed. It's kind of like CPI. Like, you could be off a little bit, but you're not usually off. 61% say in March. I mean, this is what Bill Ackman said, right? Bill Ackman covered his short on bonds because he says, look, the economy is slowing down. It's contracting a little bit, which it's probably contracting higher than a little bit faster than normal. And as a result of that, we're going to get rate cuts soon, which means there is this period where stocks can melt up even if the economy contracts, because the Fed is going to be lowering rates. And that is where there is a lot of money to potentially be made on a trade.
The market is, from my perspective, getting it right. I mean, a very, very small chance of a cut in the first quarter, about 14%, you said. And yeah, starting in March and April, it gets real. And I think that despite what the Fed officials like to tell us that, we can keep them higher, we can raise them, I think it's largely taken as a threat and not real.
Josh, right now we're showing the audience forecasting the Fed right now from the CME Fed Watch tool, showing a 97% chance of a cut in June that's being priced in right now. So I want to talk to you. So you're saying that you think that the Fed is definitely done hiking rates. So that kind of assumes on your part that we're going to hear from a dovish Jay Powell in a few days during the December meeting. If we don't get that dovish tone, what do you think happens then?
Yeah, I think that certainly the market sells off, but I think that it'll be short-lived. I think that the Fed has been saying one thing and the market has been doing enough.
I agree as well. I think we'll sell off, but I do think it will be short-lived, because at the end of the day, the Fed, or the market, knows where the Fed is going to go.
For several months now. And so I don't know if a lot changes. I think that he feels like he has to say certain things, and I get that, trying to maintain some credibility and, not getting ahead of themselves. But I think the market sees through it and is looking out over the next 12 months and not the next month. So I don't think anything changes.
Let's talk about where you're looking for opportunity. We're talking about the recent rally when it comes to the Russell. You're looking at mid-cap, specifically the S&P 400 mid-cap index. You say it's actually at a discount right now compared to the broader market, trading at 14 times forward earning compared to the S&P at 19 times forward earning. A lot of that's based on lower yields. Is there something else attractive in there? Is it just simply a yield play, or are there certain companies in this index that you see as attractive?
Yeah, mid-cap stocks, at 14 times is a meaningful discount to the S&P and an even greater discount to, the NASDAQ, which is almost 30 times. And I think that, the last year, the Russell 2000 mid-caps largely have not participated in the rally. And I think, we could certainly see deal activity pick up next year, which is a nice catalyst for mid-cap stocks. But
now, the other thing that's really interesting here is it begs the question of growth as well, right? So what he's saying about mid caps and small caps are really interesting. Can we sustain the S&P continuing to rally, call it 20%, the same as next year? with the level of growth we have. And that's where you have to get to some more qualitative theses as well. AI is not going anywhere, right? And so what I'm really happy about is that big tech is selling off right now, because you don't want Microsoft at an all-time high going into January 2024. You want a little bit of a pullback, right? And so big tech, investors are taking their profits on it. It makes a lot of sense. It's starting to come down lower. Going into 2024, expectations get a little bit lower, at least just on the pure stock price. But like, Google's not slowing down. They're going to buy back older shares. Not older shares. They're going to start buying back a lot of their shares. Those buybacks are going to help increase EPS. Microsoft's not slowing down. AI Copilot is becoming a thing. Amazon is not slowing down. I mean, Meta, $34 billion off stupid Instagram ads. That it's going to keep getting stupider. Like it's like this is not stopping. And so the question then becomes, if this is not stopping going into the new year, the market has to value some of that growth. They can't just discount that growth at all. That growth's going to be there. You've got inflation starting to fall off a cliff, and the Fed starting to lower rate cuts. And now we're pricing in 61% chance by March, if not at least by June, which means there's going to be a period where things get exciting, because you can't really see why the market necessarily sells off, or what is that crack that's happening. Could there be a black swan event? Yes. Could there be a lot of things that stop the face ripping rally from happening in 2024? Yes. But it's just, you start putting the narrative together, and then you got fucking crypto pumping, which just props up a whole nother part of the economy. It's just really hard to see things over the next 6 months and 8 months, going to absolute shit. But we'll see how it ends up happening. You guys are talking shit about me in the chat, bro. This is too much. It's too much shit you're talking about. Dude, the sound. Okay, so Kelly did get me a soundboard, and like, I tried to set it up, and like, it was a very complicated thing to set up. Maybe I'll try to set it up tomorrow. It's right there. I'm looking at it right there. And I was just like, why does, like, I'm supposed to just plug it in. It's supposed to work. And it's like all these different settings. I'm like, you know what? This is just too complicated. I value my time too much. Okay. I've got things to do. So we'll see if we can try to set it up. I should have a soundboard. Like, I think at this point we need program sounds, and I need to just be smashing it at the right moments. And getting those sounds out there. Chris says, I use Fidelity too. Robinhood has a limit on asset classes. I also buy bonds, preferred equities, and CEFs. That's also a good point for Robinhood. They can introduce mutual funds, index funds. They can introduce, money market funds. They can introduce bonds and futures tradings. There's so much opportunity that Robinhood has yet to put on the platform. They have the best platform. They just haven't introduced these things. And as they introduce these things, that's also going to get the market pretty exciting. I did load up on some more Robinhood options yesterday, so we'll see how those turn out today. Look, at the end of the day, I think Robinhood is one of the best risk rewards to the market right now, given its correlation to crypto and given the valuation trade. I would not be saying this if Robinhood was even $11. Robinhood being at $9.81, Robinhood being at $8.70 over the past couple of days, this is where I start to feel that the valuation is nutty enough. Now, the problem is, if we get a broader market sell-off, Robinhood doesn't have to be at $10, right? I think Robinhood might open at close to $10. Robinhood could fall right back down to $8.99, $9.40, $9.30 if we get a broader market sell-off over the next couple of weeks. But going into 2024, I just think there's going to be a larger correlation with crypto, and I think there's going to be more of opportunity for Robinhood as the valuation continues to get stupid. The other reason I'm excited about Robinhood is just because, like, the valuation has been dumb for 2 years, but the problem is interest rates were going up. So Robinhood's been stuck between $7 to $9 for like literally 2 years, but interest rates were going up. So you couldn't blame the market for not giving Robinhood any premium, because it's like, if interest rates are going up, people aren't trading, therefore your platform's dead. Now things are changing. People are trading because interest rates are going to go down, and they still have $5 billion they're getting off cash. So imagine interest rates come down 50 basis points. Robinhood's still making 5% off their $5 billion in cash, and equity trading is going up. So they're getting this free like $200 million every quarter just off their cash. And on top of that, they're getting all this equity trading volume because interest rates are going down, which is the biggest bull case scenario, that interest rates don't go down that much and Robinhood makes money off their cash. And because interest rates do go down enough to stimulate the markets, people get excited, they start trading, and then the $8 billion market cap just looks stupid for Robinhood, and you can potentially get a lot more momentum. So we'll see what happens, and we'll keep going from there. Yes, record the cowbell for the soundboard. That's a good idea. I think I'm gonna have to play the cowbell no matter what in person, because we just need the raw cowbell when it comes to the market open. But I should definitely have a little button there that allows the cowboard to be good. I'm grateful for the gift that Kelly got me, guys. I'm not saying I'm not grateful for it. It was just complicated on how to set it up. And I was just like, all right, I'll deal with this later. Palantir 1823 right now in the pre-markets, 5 minutes until market open. Thank you for being here. For those that didn't get the news, I did not sleep last night. So I'm running high off the adrenaline. I slept for like 1 hour, but I am very, very excited to see where this market goes today. SoFi had a great market yesterday. I mean, a great momentum yesterday. It went up to like 820 at one point, now down to 789. We'll see what happens with SoFi. Honestly, I am more bullish on Robinhood than SoFi. And the reason for this is, and it could be a little bit of a weird take to people, but I think I understand Robinhood's business and what allows the stock to go up way better than I understand SoFi's business. I think I understand SoFi, but if you ask me a lot about their gain of sale margins on their lending, I couldn't answer it as well as I can talk about Robinhood. I just couldn't. So in the short term, I think long term SoFi is probably a much better business than Robinhood. At the end of the day, SoFi is a much more stable business. Robinhood is just too cyclical to be an investment because I don't want to be investing in something that every time the market goes down, the platform is dead. But as a trade over the next 6 to 8 months, I think Robinhood probably can outperform SoFi, and I understand the catalyst needed for Robinhood to do better than SoFi as well. But SoFi at 790, it's breaking to that $8 range. We got PayPal, 59.40. PayPal was up yesterday about 0.34%, which is not bad for PayPal. At least we got some momentum there. Bitcoin, 42,035 right now on Bitcoin as we are 4 minutes away from the market open. Again, this momentum on Bitcoin, it just seems to not be going down. Also, one other quick point on Robinhood, I forgot to mention this. There is a Silicon Valley tech guy who he posted a screenshot yesterday of Robinhood offering to give you 1% with no cap of a match on your portfolio if you switch brokerages. And that post went viral. It got 200,000 views and a ton of people that are high net worth individuals from Silicon Valley. You could just see if you click on their profiles, they're GPs at venture funds and all this stuff. They're yo, I want to take advantage of this. And so he posted his communication with Schwab that was offering him a measly $5,000 to stay at Schwab. And he was like, yeah, but Robinhood's offering me 1%. And the dude's probably working with multiple six figures, if not seven figures. So Robinhood's paying a fat bag to get him to switch because they want people like that on their platform. And they're running this promotion until December 8th. So you've got innovation like that coming from Robinhood as well. And the legacy brokerages, they just can't compete or they don't compare enough to compete. And then it comes down to, is the product that much better? And if this guy that's been using Schwab his whole life feels like, yeah, the product's way better and I get, 1% no cap on my capital to switch, then it's a no-brainer. And I think a lot of people are going to start to recognize that it's a no-brainer when they're using the platform. Enphase right now at 108, down 0.62%. We got red, Marathon red, Coinbase red, Arc Innovation red, Snowflake is red, Enphase red, Riot is red, MicroStrategy up just a little bit. I think we're going to see some red because we had a really green day yesterday. Obviously with Bitcoin spiking, Amazon red, Google red, Meta red, DNA red, TDoc red. We're going to probably see some red. Robinhood's green. So we'll see if Robinhood ends up turning red. Palantir, obviously red. Palantir now 1824. I'll be really interested to see if Palantir breaks below 18 as soon as the market opens. If you put a gun to my head and ask if that's going to happen, I would say yes. I'll probably be wrong about that. But the way I saw it in the pre-market at 3 a.m. or 4 a.m., it was at 8:07 and it was just barely staying above $18. There might be some more sell side pressure than buy side when it opens. So we'll see how it performs. But it looks like it's going to be a red day. Maybe not a super red day, but it's definitely going to be red. We had a great month. We're probably going to see a little bit more red going into the beginning of the month of December. M1 and Schwab have also offered $5,000 to stay, but I said the same thing. 1% transfer, no option fees. FU. Yeah, but dude, it's just becoming this. Me and Sebastian were on the phone for 2 hours. For those that are just joining, I stayed up last night. I was doing a ton of work, and then I called one of my good investment banking buddies in Los Angeles, and I just, it was also made me really grateful to have someone. It was a rigorous intellectual discussion for 2 hours at 3 a.m. my time, 1 a.m. his time, or 12 p.m. his time, 12 a.m. And we're just going back and forth. And at the end of the call, we just concluded, dude, it's fucking undervalued. And it's I'm really grateful to have some of those conversations with people at this point in my life, because these are conversations that could turn into a lot of money if you're willing to have them. But a lot of people don't want to have these conversations because they're boring. They're not boring to me. 3 a.m. I was more than excited to have that conversation. And so let's see how the market performs today and how things keep going for Robinhood and every other stock. Thank you, 753 people, for being here. It is December 5th, 2023, 9:30 a.m. The stock market is once again open. Wake your ass up. Here we go. Let's get right into it and see what we've got going on. Robinhood, S&P 500, 455. Robinhood opens up 0.76% up on the day, 972. The reason this is up again is because November trading volumes were 75% higher than October trading volumes for crypto. This was released on their 8K yesterday. The market got really excited about that, and that's why the stock is up right now. Palantir, 1821, down 1.1% on the day, holding 1820. We'll check on it in a couple of minutes and see how low it goes, or if it continues to stay at this level or can go higher. Right now, 1817 on Palantir. Fubo is down a little bit, 1.7%. Honest is down 0.35%. Beyond Meat, the stock was up 20% yesterday. A potential short squeeze was happening. Market cap of 537 million. Definitely a small cap right now. Down 3% on the day. SoFi down 1.3%, $7.86. PayPal down 0.84%, $59.34. Spotify down just a little bit after being up 8% yesterday on cutting 17% of their workforce. Elf Beauty down just a little bit, 1%. S&P 500 down 0.31%. Microsoft is down. Enphase is down. Snowflake is down. Arc Innovation is down. Look at what's green. Got crypto. Crypto and Bitcoin stocks are green. Interesting. Marathon is up. Riot is up. MicroStrategy is up. Coinbase is up. These stocks were red in the pre-market. Now they are green. So we're seeing some of that momentum switch a little bit. We're getting a little bit more green because Bitcoin's right now at 42,000, whereas traditional stocks and equities are down. Tesla just turned green, 0.05%. 235 was at 233. So now Tesla just turning green a little bit. Bitfarms, another crypto company, up 2.6%, $1.79. Disney is down. Salesforce is down. CrowdStrike is down. NVIDIA slightly green, 455. NVIDIA, I didn't even see it went down to that 450 level. Obviously, the market was just like, you know what, NVIDIA, we're not going to give you the valuation in multiple, even though your growth was awesome. So NVIDIA coming down a little bit back to reality as well. Amazon, Google below 130. Google now at 129. The market not getting excited about Google. Google is delaying their Gemini launch, which is their like AI developer platform, until 2024. They've been delaying this for a long time. It hasn't come out in a while. And so that's why the market's also like, you know what, Google, you're going to let Sam Altman fucking destroy your monopoly you have on search. We're just not going to give you that premium until you show us something, until you show us like some progress. And Google hasn't lived up to the challenge, at least not yet. Palantir falling below 18. There we go. 1796 right there, down 2%. Then it recovers 18. As I say this, 1802. You've got more sell side pressure than buy side pressure on the stock. It's at this point, it seems obvious that is kind of how the market's interpreting it. $39 billion market cap, losing $7 billion in market cap over the past couple of days. Snowflake, for comparison, this is where things get weird on valuation, right? Snowflake still at a $61 billion valuation. So their premium, the market has continued to give it. Palantir now trading at a $20 billion valuation below Snowflake. And part of that, honestly, is because of the growth, right? Snowflake's growing at 30% year over year. Palantir at 17% year over year. So either institutional investors are like, you know what, the growth's not enough, we're going to take our profits, or retail is selling. I don't think it's retail. Like, I don't think retail's sophisticated enough to be like, yep, $18 the price we're going to get out at if retail was buying at 21. And so I think down 2% in 3 minutes as the market opens after being down 9% yesterday, I think the toots are taking their profits. I really do. I do not think this is retail. And so hopefully this creates a massive opportunity for retail. I would have no problem with that, but I don't think this is retail that's causing the rally. Now, it could be retail compounding on it if they see the stock keep going down and they get really scared that they bought at 21 and now it's at 18. They're like, you know what, let me just take my losses, especially with tax loss harvesting going on. But I don't think this is from retail. I think this is institutional. We'll check back on Palantir in a little bit. TFC, you got this down about 0.83% of the day, $33 right now. Verizon is up 38.44. Verizon trying to close in on that $39 range. Datadog is down just a little bit. Apple, for some reason, Apple is the big tech that's green. All of big tech is red. Every last one of them. Apple is green. Interesting. I don't know why. And Apple's up almost 2%. I actually don't know why that's the case. I don't have a clear answer or a thesis for that, but Apple is down. Robinhood now $9.81 on the day. What do we got going on in the chat? Baba, new 52-week low. Oh my goodness. What is going on with Baba? Yeah, I mean, look, it's China. It's don't touch China. That's all there is to say. Even though Baba's valuation is as ridiculous as there is in the market, but don't touch China. It's just hard to touch China. Transferred everything from TD to HUD. Yep. A lot of people are doing that as well. Let's check on CleanSpark. Let me look at that real quick. This bad boy is up 2%. Wow, this one's still running. CleanSpark's up like 300% year to date. This is a Bitcoin energy miner. I think right now, also getting exposure to Bitcoin without buying Bitcoin, I think Robinhood's the better play than some of the energy miners because the energy miners have gone up a lot over the past year, whereas Robinhood is barely up 20% year to date. It's up like 15% or something year to date. And a couple of days ago, it was up like 10% maybe. Let me check on this right now. Year to date, yeah, it's up 18%. Yeah. And at just like a couple of days ago, it was down 4% year to date, right? So I think the alpha is probably more in Robinhood than some of the Bitcoin miners. But obviously, if Bitcoin keeps going up, those miners can start to do well as well. Palantir now 1815, getting a little bit above 18, and Robinhood 982. Let's get a look on the Bitcoin ETF approval process. That is obviously a very big catalyst for crypto, and it is a big catalyst for stocks that have crypto exposure. Here is the CEO of Grayscale talking about why that ETF approval is going to happen and why it's going to be so important for the stock market.
Michael Sonnenschein. Michael, good to see you again.
Good to see you.
How would you have, I know how you would have answered that poll. Hope of a Bitcoin ETF.
Well, if we zoom out and we look at 2023, Bitcoin is up 150% this year.
Not bad.
It has had a positive correlation with gold, as you've mentioned. And if we look at 2023, it was a year that was characterized by rising inflationary fears and investors looking for places to go to hedge against those types of pressures in their portfolio. That's Bitcoin, that's gold, that's now bonds. And now, as we get to 2024, and the Fed may in fact be signaling that they're going to start to cut rates, because Bitcoin means different things to different types of investors, you may see some of that positioning towards a risk-on trade because Bitcoin is considered a risk asset. And you may see investors allocating to it, thinking about it more as a technology investment than perhaps a store of value.
And I had another poll up about 2 seconds before I realized that I needed to do a better poll. And I had inflation on there. And I did the second poll, the one that you saw up there, without inflation, because I thought, you know what? We've been talking about inflation for 2 years. The rate of inflation is coming down. And so I just can't imagine a lot of people are suddenly discovering this as an inflation hedge, which is why I pulled it off. What do you think about that?
No, I think that makes complete sense. I think in times like we find ourselves in now, where there's geopolitical tensions and unrest, we have historically seen investors flock to assets like Bitcoin. And so it's no surprise to see that outperformance again in this year as well. But also one of your other parts of your poll was the hopes of a Bitcoin ETF coming to market.
Do you know anybody that would like to have a Bitcoin ETF?
Well, as you know,
the Grayscale Bitcoin Trust. There was an article in CNBC Pro today that people that were cited said they were very optimistic that a Bitcoin ETF would be approved in early 2024. Whatever you know, I know you can't say it or confirm anything. I get that. It's all very legalese. But are you optimistic we will get one?
I am optimistic that we will get one. As you know, we won.
But you've been optimistic for a few years.
Well, because we've been working on it for years, and that's our number one priority, right? We won our court case against the SEC this summer. We've continued to have really positive, really constructive engagement with the SEC, and it remains a matter of when, not a matter of if.
I think he's right on that. I mean, look, this ETF approval process has been going on for years now. It seems like we're getting to the point where it's going to get approved. And when it does get approved, I think that's also why we're seeing a run up in Bitcoin. I could there be a sell the news event and the ETF gets approved and no one cares? Sure. But just logically thinking about it, people's entire 401ks can now use Bitcoin as an asset class that they get exposure to. These are hundreds of billions of dollars that could come and get some type of proxy exposure to Bitcoin, which is getting more money into this currency, this asset, whatever you want to call it. And as a result, if that ETF gets approved, the pure momentum of that, I do think is bullish. Like at the end of the day, I don't see what the bear case to that is or how that could be a reason for why Bitcoin sells off. If it runs up like crazy, then sure, there's a sell-off. But that is bullish at the end of the day. And one of the other things that was really important to understand about Bitcoin, or what I've been learning about it, is that, again, 30% of it is circulating in supply. 70% of it is being held by people that don't want to give it up. And as basic supply and demand, right, as more people buy in, if people aren't selling, it's going to start to pump up a little higher. And the question becomes, in my argument about Robinhood, what are the players that are trying to get access to the distribution of people trying to access Bitcoin? Robinhood's going to be one of those players, and that's why it's going to be beneficial to them. Hood's at 10. We got Robinhood at 10. It's there. It's $9.99. Look at that. Not bad. Not bad at all. No, I didn't even see that. Not bad at all. So it touched 10 yesterday night, literally last night. If you're following me on Twitter, I was doing some screenshots about it. It touched 10. There you go, up 4% of the day. That's what we expected. We expected it to just be higher. Yeah, there you go. Robinhood, $10, or trying to get to $10 right now, $9.95. And still, it is trading near cash, right? dude, I don't know. I just maybe I'm obsessing over it a little bit too much, but at this point, I'm thinking that this is the best risk reward, and I wanna see if I can make some money off this one. SoFi 778, 780 down 2% on the day. Spotify 195, Palantir 1807, CleanSpark 886. CleanSpark now turning a little bit red. Snowflake 186. Where's Bitcoin? Where's Biddy? Where is Biddy? Let's see where she's at. Where is Bitcoin? I hate that we can't just find Bitcoin easily on Webull. Like I search for it and it gives me this Bitcoin Cash nonsense. Like what is Bitcoin? I don't know what Bitcoin Cash is. Why are you showing me Bitcoin Cash? Just show me BTC. Show me the money. 42,123 on Bitcoin, up 0.81% on the day. I mean, like it's running. It is running. And if it's running, there's going to be some more momentum. Amit, are you covering the data releases that are coming in shortly? Yes. I definitely knew there was data releases that were coming shortly, Imnop, and I didn't, highlight your comment to remind myself that there's data reports coming shortly. So I will definitely be covering the data reports coming shortly because I know every single data report that comes out in the stock market. So what data reports are coming out shortly? What fucking data is coming out? Like, what? Oh my gosh. In 20 minutes? Oh boy. Well, we go till 10 a.m. anyway. So at 20 minutes, I guess we'll cover the data reports coming. I think that the JOLTS report, that was the main thing that I knew was coming out. What else is coming out? Dude, I'm sorry. I haven't slept all night. I have no idea what data reports are coming out. I do know job reports are coming out. And so we'll take a look at that when it does come out. We're expecting 9.6 million versus 9.4 million job openings. And I think that number is going to really implicate as well how the market's thinking about unemployment. Because again, unemployment's getting closer to that 4%. Right now it's at 3.9, not officially at 4. JPOW wanted it at 4.1. So honestly, JPOW wanted it at 4.1 and he's kind of getting what he wanted. Like he's getting inflation to come down dramatically and he's getting unemployment to go up, not dramatically. So he's in a sweet spot that he's getting. And, I don't think he can be that mad about what he's getting as well. Why do you use Webull on here if you love Hood? Webull is just easier for like looking at the stocks like on a desktop. That's all. That's the only reason I use Webull. There's nothing special about that. I know some people use Webull to trade, and I'm just like, okay, I've never used Webull to trade. It's a little weird. Yeah, in terms of looking at it, I think it's fine. Okay, let's get a bearish claim. So here is JP Morgan that put out a $3,500 price target on the S&P 500. Now JP Morgan also has other price targets that are more bullish, but let's hear their take on why the market's not going to be as good as we expect in 2024. Let's hear their logic for it.
We did see stocks finally snap a 4-day win streak. Joining us now, Mira Pandic, global market strategist at JP Morgan Asset Management. We had one of your technical guys on yesterday. Horrible. 3,500 was his prediction. You're not there, but you certainly think we've gotten a lot of next year's returns already in where the averages are right now. Because it's not going to be great next year in terms of earnings and in terms of other things. And we've already had huge gains. So valuations are high, I think you think.
The theme for next year is tempering expectations in 2024. I do think overall we have a pretty benign outlook for the economy itself. But when you've had a 20% rally this year, when you've had elevated valuations, and when earnings expectations for next year are in the double digits, when we can probably achieve something about half of that, just given what we heard in the third quarter from CEOs, gloomy outlook. Remember that disinflation helps markets and margins. It doesn't help revenue. So we worry a little bit on the revenue side as to what companies can produce. So if you put all of that together, we need to be a little bit less optimistic, I think, than many in the marketplace are right now about next year, especially because what we've seen in November is very much a sentiment rally, not a fundamentals rally. It's been driven by multiples. We've seen a collapse in bearishness if you look at the AAII investor sentiment survey. So I think people are getting a little bit exuberant about finally having some relief from the Fed, but we have to think about what that actually means next year.
24 was supposed to be the year where we return to double-digit growth. You're convinced with what we heard in the third quarter from the outlooks that these guys aren't just being conservative. A lot of times they talk down expectations so they can beat expectations. You think we can now say with some probability that it's only single-digit earnings returns next year?
I think that's fair because also the big focus this year was margins, and we saw a lot of margin stability. But I do think at this point, the pricing power has been exhausted. Luckily, that comes at a time where we're seeing decelerated wage growth, decelerated input costs. But I do worry about when we pair this with some of the headwinds with the consumers, what does happen on the revenue side? I mean, if we look at the Atlanta Fed's GDP tracker, last quarter realized we had over 5% growth, but we're slowing to about 1.2%. So as the economy...
She's correct about that. The new GDP forecast did come out yesterday. Instead of 5%, it's at 1.2%. So that's another reason I think we're seeing some volatility and some red here today, which is that if we're not growing as much as the market expected us to grow, does that mean the consumer weakens and that potentially hurts earnings? And then a lot of growth for 2024 is already priced in.
Normalizes as the consumer becomes a bit more judicious, as companies even say, maybe I need to cut prices a little bit to bring people in just to support those revenues. I'm not sure that double digits is realistic.
So we've had margin expansion. Multiple expansion. You noted that already. There's no more of that coming. So we can just purely use your earnings per share number for what the stock market is likely to return. So you're talking about 5% for a stock market return?
I think that's a reasonable outlook for next year, again, with a pretty benign going back to normal type of economy for the economy itself next year. In 2024, we see a 2024 economy. So 2% growth, 0 recessions, 2% inflation, and 4% unemployment. So again, a relatively benign outlook, but again, after such a strong year,
Right.
It's just hard to see.
But why
much.
would anyone buy stocks rather than a 2-year? You can get
Good question.
Close to it. So if you can get that risk-free, why even? Because you can't guarantee me that the market's not going to be down 10% next year.
No, I can't. And I think having a little bit of balance is important because if any year were to be down 10%, coming into this year, we would have thought probably this one. We had expectations across the board for negative returns.
So the one thing I think they're not thinking about here, or they're not taking into account as well, that's really important is, and we talk about it, let's see if there's an update. We'll actually check live if there's an update on this stat we love using. Global money market funds. Global money market funds are approaching $8 trillion. United States, about 5.73 trillion. How much money are in money market funds? The more money that's on those sidelines, they're going to want a home. And in 2024, if we get any level of momentum, I don't think they're staying stuck in the market. Oh, we have an update. Wow. Look at, oh my goodness. Is that correct? Is that correct? Well, they're definitely up. So they're at 5.84 trillion now. Wow. November 30th, 2023, total money market fund assets increased by 72.98 billion to 5.84 trillion. Guys, the reason this is crazy to me is because it increased by 29 billion on November 22nd. So in the 8 days from November 22nd to November 29th, it increased another 72 billion global money market funds. Or not global, US money market fund assets. Wow. That is a lot of money that went into money market. I did not, 72 billion. That's basically 2.4x the amount we saw the week prior. So here's the question, right? The market rallied 9% in September. There's still a shit ton of money, 5.84 trillion on the sidelines collecting that risk-free 5%. There's going to be, as Chris says in the chat, some yield chasing in 2024. This is why I'm a good amount of cash flowing dividend stocks for 2024. And I think the reason he says that is because at the end of the day, a lot of these investors are going to want yield. And if some of that yield is coming from a TFC or a Verizon that's giving you 6 to 7%, which is better than the money market fund, and you get capital appreciation, that's where some of those assets become incredibly attractive. But on top of that, I also think the assets that are, the growthier names that when interest rates get cut and a Palantir can go up 30% in a month, that's way more attractive than 5% in money market funds. The question becomes if the market is able to give those returns to get those money market fund, $7 trillion that's on the side, excited right now, 5.84 trillion on the side, to come back in and play with the big boys. If that happens, bro, there's a lot of money that's waiting that's not even in the markets yet. That's a lot of dollars chasing a finite Bitcoin. That's another point. A lot of that money can come and chase some more Bitcoin. Like, that's a data point I think we can't ignore in regards to how much money is actually out there and not invested in the capital markets. Like in 2020, I mean, I don't know what the exact number is, but I would imagine there was there's no way there could have been 5.84 trillion in money market funds because interest rates were at zero. Interest rates were below zero at one point, right? People were chasing equities, and now that same momentum is likely going to happen it's going to take time for it to reverse. But as it does, there's going to be more money going into the stock market. Let's get back into equities. CleanSpark jumped almost 5%. Let's take a look at that real quick. Let's check on Palantir as well. Bitcoin still above 42,000 on the day. CleanSpark, look at that, up 5%, $9.30. Robinhood down, it's up 2%, but it's down from that $10 range, $9.80. So it hit 10.04 as the top. Palantir, 18.27. Okay, so Palantir rebounds. Palantir was down at 17. It rebounded right back up to 18.20. Not bad at all. Seeing a little bit of a rebound in Palantir. We'll see how that lasts throughout the rest of the day. SoFi is getting hammered, down 2%. PayPal, goodness, why is PayPal down 2%? Basically 3%. Why is PayPal? Goodness gracious. I mean, you thought PayPal makes some momentum. It hit $60 yesterday, and it's just, I think the market just does not like PayPal, bro. Until they show the market that they can change, even though I don't think anything's necessarily wrong with the company. The market's just not going to get excited on PayPal. Truist falling below $33, $32.95 right now. So Truist had a really good momentum over the past couple of days. I can see right now my options are showing a little bit of an inverse relationship with the stock price today, which means there is some more momentum on the options for Truist versus the price itself, which is good because we're seeing people take a bigger bet on the future of what Truist will be. Verizon 38.29, that's going up. Datadog 117, Apple 192, Shopify 71, Adobe 595, Adobe falling from about 615, Uber 58.04, down about 1%. Uber got into the S&P 500. A lot of people are saying, oh, Palantir's down because they got excluded from the S&P 500. I do not think at all that Palantir is down because they're not part of the S&P 500. We knew that they're probably not going to get included. 2024 was going to be included. We knew that was going to happen. And so that to me was not the interesting part. The thing that happened yesterday was that analyst report that really got market scared, and I think institutions taking profits. But Palantir is probably going to be in the S&P 500 in 2024, and I think the run up to 21 was institutions gaining exposure before they get included into the S&P 500, not just because of the December decision on Palantir potentially getting included. So I don't think lack of S&P exposure was a massive reason why markets were like, you know what, Palantir is not going to get included, so we're just going to sell it off. I think if anything, they're buying before it gets included. I think, quite frankly, institutions just wanted to take profits yesterday, and that's why we saw it come down. Obviously, valuation-wise, you could argue the Palantir got stretched at that $20 range. Just price to sales, pure growth, multiples, etc. The PE got kind of high. I get it. I think PE is now 278. It was at 300 at one point. I think people are willing to pay for that growth. The problem is that growth is not there. That's been my biggest concern about Palantir for the past couple of months in terms of the valuation. And either the street recognizes that and they drop it, and that's a great opportunity for retail because we understand the growth story, or the street doesn't get it and it keeps pumping, or the street's willing to pay for that premium for that growth. And I think we'll see over the next couple of weeks of what the street ultimately decides Palantir is worth to them in regards to growth or in regards to not paying up yet for that growth. NVIDIA green 460, Amazon green 145, Google green. All right, so we're getting some green here on big tech. Meta's red 318. Meta about down 0.52. Zuckerberg sold like 100 million the other day or something. It was part of a scheduled sale, so not that big of a deal. But Meta is down from its all-time highs of 340. Square, Block 63, that's up as well. GameStop is down 6%. It was up a bunch yesterday. I think like 10, 15% yesterday. Now it's down. Maybe up 20% yesterday. And CleanSpark, look at that. Wow, CleanSpark. Oh my gosh. 7%. The thing that people don't remember about CleanSpark is that their open contracts for Jan 2025, the $10. Let me tell you guys right now. Yeah, there's 22,000 contracts open for $10 calls. January 2025, January 2026, there is about 1,000 contracts open. So people are really betting that that 2024 is going to be a top for crypto, part of the cycle, and that these companies are going to benefit off of that, particularly Bitcoin miners. CleanSpark up now year to date. The return on CleanSpark is 349%. Oh my God. Absolutely insanity. It was $3 in October. Dude, if you understood where the Bitcoin energy miners were, and I didn't, therefore I don't deserve those gains. But if you did, you are doing phenomenally well on CleanSpark. And this is what I think is also going to happen to Robinhood as Bitcoin exposure goes up as well. It's just it's going, and Robinhood's valuation to me is a lot more attractive when you take in all the other things. The worst case is like, let's say crypto doesn't do that well. It's still a good company. And there's a definitive thesis around the company. So even if crypto doesn't affect Robinhood that much or crypto crashes, you're still buying a company at the end of the day that has a lot of growth prospects that's trading at cash. Crypto is just like a cherry on top in terms of what it can do to the valuation. Zuck parked his cash in treasuries, no doubt. Yeah. I mean, look, Zuck has a foundation, nonprofits. I'm sure he's probably donating and doing stuff like that. And, he's doing rich people stuff, but he's probably making a nice return on his capital. He's probably up given his shares, 10, 20x on his Facebook stock that he sold. So he made a nice amount of profit. Yeah, overall red market, folks. Nothing too crazy. Some stocks are red, like Robinhood, CleanSpark, Bitcoin's up, but the general market being down, taking probably a needed breather. S&P 500 at 455, not down too much. S&P was at 459, so it's not like it's down that crazy, but it is down. Bitcoin stocks, Coinbase up 4%, or Coinbase up 2%, Marathon up 4%, Riot up 3%, MicroStrategy up 1.5%, and Tesla up 1% on the day. Tesla now green as well. All right, that's what we got going on. Palantir now at 1826 on the day. Okay, that is it for me. Did we get PMI data already? Let's see. Purchasing Managers Index. I've never covered this piece of data before. I've never covered this one before. Let's see on, here we go. United States Manufacturing PMI. I believe this is the one you're talking about, right? Okay, let's look at this before we leave. This is the one that came out. So let's look at this one, and then we'll do word of the day, and then we'll be done for today. So U.S. manufacturing PMI confirmed at 49.4 in November 23, the lowest in 3 months, pointing to a renewed deterioration in operating conditions in the manufacturing sector as lower new orders weigh. The return to contraction in new sales led to a slower expansion of production and further cut to headcounts, while inventories continue to be run down and input being stagnated. Meanwhile, input costs rose at a notably slower pace. A lower impact from energy and material prices pressure dampened inflation, with firms moderating the extent. U.S. manufacturing PMI, I don't know what 49.4 is as the actual number. What does that mean? I'm sure it's on a scale of 100, but it's the lowest in 3 months. And it's basically, from what I understand, the cumulative cost that it takes to produce in the United States. PMI, Purchasing Managers Index. Yeah, how much people are willing to pay to be able to produce these products. Out in 4 minutes. It's not out right now. So why is this saying it's out right now on Trading Economics? That's weird. It's saying for November too. It's saying November 2023. That's weird. Okay, so we'll see what happens if it's out in 2 minutes. I think we'll also get jobs report in 2 minutes. So let's wait till that as well and see what comes out. So let me pull that up as well. Let me pull up Jesse's tweet as well. What do we have here? Also, jobs report in 2 minutes. Jobs is a big one. Okay, so let's actually, this is why I pay for YouTube TV. We can actually see the jobs report live because we have YouTube TV. Even though it's $65 a month, it's a little pricey, I'm not going to lie. But this is why we pay for YouTube TV. So let's pull that up. Let's get the jobs report live as that comes out. This is the JOLTS report, I believe, that's coming out for this one. So let's have that come out. They'll probably talk about PMI as well. And we'll go from there and keep it up. Okay, so let's have that pulled up. Saying Robinhood is a good company despite Bitcoin. Block is a better version of that. I don't understand Block as much as people try to get me to understand Block. I understand Cash App. I don't understand Block writ large. But I understand Robinhood, dude. Like I understand, and I want to be comfortable with what I buy. And I just understand Robinhood. Like I think I really understand that business better than anything else. And honestly, when it was at $7.95, I knew I should have bought more. I really knew I should have bought more. I was like, this is stupid. Now the valuation is still stupid. It's not as stupid as it was at $7.95, but all right. I mean, look, I get it. I get it now a little bit more. We got the writ large counter. I went on an hour without saying writ large. So by the way, do you guys like the hat? I had someone tell me, someone who's very near and dear to my beautiful, fancy little heart, that they didn't like the hat. And it really made me sad because, their opinion matters to me. But I think you guys hopefully like the hat. I feel like I don't even know how to describe it. I feel like that guy that's like, I feel like a lumberjack. I feel like the dude who wears like a thick black jacket in the woods who has gloves on and shit. Like, I feel like this hat makes me feel like that. I don't know how to explain it. Just makes me feel like that. Looks dapper. Thank you. Dapper is such a good word. I love that word. I'm going to be using that word all day. That's a fun word. I love that word, dapper. All right, let's get to this jobs report. Let's see what CNBC has to say, and see what they've got going on.
Good Tuesday morning and welcome to another hour of Squawk on the Street. I'm Sarah Eisen here with David Faber live from Post 9 of the New York Stock Exchange. Carl's off on assignment. He's heading to Nashville ahead of the launch of CNBC's new cross-platform franchise, Cities of Success. It's a 1-hour primetime special that explores cities that have transformed into business power centers. Debuts tomorrow, 10 p.m. Eastern. He's going to join us from Nashville tomorrow. But turning to the markets and treasuries right now, little change. NASDAQ's a little higher, so some strength in technology. That could be perhaps explained by what's happening in treasuries, where we continue to see a rally with low yields. There's a 10-year, 4.165. So continues to move south. You wonder what the resistance is on the downside after we've...
Oh my God, it's at 4.1. Holy crap. Oh my goodness, it's at 4.1. What the heck? All right, Jolt's report. It's out. Let me share this. This is quicker here. Job openings, 8.7 million below 9.3. Wow. Wow. Let's see how the market's reacting to that. Oh man, the market likes it. The market likes it. Holy crap. Tesla's at 240. Wow. Stocks are up. Look at that. It's so sad to see, but this is the nature of the equity markets. Markets are up. The reason markets are up is because if there's less job openings, then that means there is more unemployment, which means there's less inflation. Less inflation means that the rates are going to come down. It's that simple. 8.7 million jobs are open, which is still a lot of jobs that are open. 8.7 million is a lot. But we expected 9.3, and that was off of 9.5 million in September. So jobs are leaving the economy, and it's helping the stock market. This is crazy. Look at this shit. This is incredible. I just saw my portfolio. I was like, oh wow, the market likes it. As Chris says, unfortunately, this is something to as in the euphoria of the market going up. Recession is imminent. I mean, maybe not in the next couple months, but yeah, like, dude, less jobs, less consumers having money. This is where it's going to be a really interesting time, how the market tries to value everything that's going on, because you've got, yes, inflation probably falling off a cliff with less jobs, but on top of that, how much higher does that unemployment rate get, to the point where something's breaking in the economy that none of us see, but we're getting all these hints and this data that is coming out. It's going to be really interesting to see how CNBC and a lot of these analysts kind of spin this jobs report, and if they think it's bullish or bearish. But yeah, dude, look at it. Market's freaking pumping. Tesla's at 241, Palantir 1840, recovering from being below $18. Robinhood at 994. Yeah, we're up. We are up. Big tech is Truist. Look at that. Truist is doing better. Oh my goodness. This is bullish for the markets. Bitcoin at 42,000. CleanSpark up 8%. Palantir 1837 still down on the day, but still better than green, or still better than where it was before. Let me see if I can get some more specific data on the JOLTS report. Let's see what else we got going here. That is bullish. I mean, it is definitely bullish. It's what the street wanted to see, and they got it. Services. So let me pull up the other one. 8.73 million. JOLTS is the lowest since February 2021. Wow. And February 2021 was where we had that bubble. I mean, that's when like shit started hitting the fan, right? Look at that. Look at that. United States job openings, lowest since 2021. This is getting interesting. 2020, obviously March was the lowest, or May. The economy collapsed. We had the pandemic. But it started to get much higher going. We were adding 600,000 jobs a month in 2022. That's slowed down to about 450,000 for 2023. So look, 8.7 million is still a lot of jobs open. It's not like it's not a lot. And so the bull case around this going against the bears narrative that, oh, we're getting into some massive recession is that, well, there's still a lot of jobs to be had, right? It's not like, 3-4 million jobs, but that's definitely not as much as we had before. And so unemployment, this is what JPAT wanted. He wanted unemployment to go up. It's going up. The question is, how high does it go before we get into a place where things are getting really bad? Here's the actual numbers. Non-manufacturing PMI on ISM was 52.7 versus 52 estimated. ISM non-manufacturing prices was 58.3 versus 58 as well. JOLTS lower than expected if positive to see. Initial reaction is high. So we got PMI data that was a bit higher than expected, which is normal. I mean, it's very slightly higher, 52.7 versus 52 and 58.3 versus 58. So a little bit higher on those prices, but JOLTS is lower than expected, which is positive to see for the equity markets because less people having jobs means less inflation. Remember also, the Fed has to get to 2% on inflation. To get to 2%, you've got to really kill inflation. To really kill inflation, you got to get a lot of money out of the system. And obviously people not having jobs is one way to do that. But if it gets to a higher point, then it's not going to be good for the broader markets. All right. That's what we got, folks. That's where we're seeing some green. Let's do word of the day and we'll end it for today. We're seeing some LinkedIn job reports are going higher. Yeah, I've been seeing that as well. A lot of LinkedIn message boards are lighting up and people are saying they're open to work. Sir, I mean, Spotify, 17% of employees is a lot of, that's almost 20% of your workforce. And Spotify was like, nope, see you later. And the stock went up because the market was excited. Those people are going to have to try to find a job. And, they're tech workers, so it's probably going to be easier than average blue collar workers. But we're seeing a little bit more momentum. The other thing about big tech, though, is that Facebook, Amazon, Meta, Google, they've all cut a lot of their workforce already. So they could do more cuts, sure, but they don't need to do cuts in order to show that they're doing a fiscal responsibility via cost cutting. Robinhood did cuts as well. They just need to increase top line revenue. And if they can increase top line revenue, they can sustain the cost of their labor force. But if things get bad, if we see big tech cut labor force now, then it's a little scary because it's like you already did a lot of cutting. You don't need to cut unless you actually can't afford the costs. And that's where we would see a little bit more contraction in the economy as well. Big tech starts to cut as well. Okay, let's get to the word of the day. That's it for today. Wonderkind is the word of the day.
Wunderkind.
Dude, really? Wonderkind? I'm like on a 5-day losing streak of saying it wrong. Wonderkind. Like, how could anyone, like, really? Wonderkind? Out of all that, that's not even a French word, and I still get it wrong.
Wunderkind.
It sounds German. Wunderkind. Wonderkind. Wonderkind. I thought it was Wonderkind. Wonderkind. This is incredible. A wonder child or child prodigy. It is German. I was right. It was German. It was definitely right. Awesome. The music industry was abuzz with talks of a new rising star, a wonderkind. Doesn't even sound right, bro. Wonderkind sounds better. A wonderkind whose debut album took the charts by storm. So I would say when it comes to comedy, I am a
Wunderkind.
When it comes to comedy, I'm a wonderkind. The world just hasn't seen my potential yet, but eventually I will be, selling out Madison Square Garden and I'll be performing my comedy special. And I would say I'm a wonderkind when it comes to comedy. All right, that's it for me. Thank you everybody for joining. I definitely got that word wrong. You guys are getting it right. We'll be Daily Palantir episode. We'll be back later today. Finance Junkies back at 9 p.m. We'll discuss this CPI, this shelter, this PMI report and this JOLTS report and what it means for the broader economy. Crypto going up, and we'll keep going from there. Thank you all for joining. I'll see you guys tomorrow, 8:45 a.m. back on the Market Open. Bye, everyone. Have a great day.